In our last video on divergence, we talked about the use of a volume indicator to identify divergence on the Spoos. Now we're going to add to that divergence on the premium. We use the z-score for that purpose as well. And let's look at the same day that we just talked about. Now we said, for example, as the market moved up here, we're divergent using the volume, as the volume here is not as great as it was previous. There's been a complete cycle. But now look at the situation with the premium. We get our initial move up here from the low. We measure the high of the average z-score. Here it's a little bit lower. Here it's lower still. The divergence is obvious. The market's going to come down. So all we do is just wait, for that volume here to go negative, and you can see where the volume or where the z-score is here. Moved up momentarily, barely made it into the zero line, and you can pretty well be assured the market's going to drop. Now notice the long trade right in here. Okay, come into a low, cycles one more time on the volume. Look at where the z-score is, way above. Market's going to rebound. And see how this low, this low, this low, and that low. Here's ultimately where we're crossing the zero line, but you can see how the z-score is getting progressively higher. The lows, we're getting higher lows on the z-score every time it drops down. So there's a divergence there. Wait for it to go above the zero line, and you have your trigger and your long trade. Remember here, all right, we got a second full cycle up above, and again look at where the z-score is here. Here we're not really quite into a cycle, but here we are, and there's your trigger, and down she goes. Now you can practically pick off just by looking at this. Right here, boom, higher high, nothing. You know the market's going to drop. Got that low. We're basically right into the zero line here, so there's quite a divergence here. There's your high. There's just nothing there in the z-score of the premium. Nothing here, nothing here. It's going to drop. And so it does. So the premium is another very useful tool looking at the divergence that takes place in the z-score reading. You need to be comparing that with where the Spoos are at the time of that. And we can do that automatically in our strategy. We read divergence pretty much automatically. We keep track of highs and lows and run comparisons on the volume bars and so on. And very easy for us to identify opportunities for a divergent trade. And we have a setting right within our strategy that's designed specifically for that purpose. So now you've got divergence on the Spoos, you've got divergence on the premium. A couple of great ways to take manual trades. Great learning opportunity that we're providing you through this video. So come see us, give us a call, ask for a demo. We'll be happy to share further information from you, or with you. Let's say that right. Share further information with you during our demos. This is Rod Kusin and Spooman for Risk.